I'd like to introduce our next panel about connected consumers, mobile and Internet of Things. Let me start by introducing our moderator, Elias Gagas, who is the Chief Digital Officer, Payment Components, who will introduce our speakers.
Marwan and Fadi, just give us a couple of things about who you are and what you're doing.
Okay, I'm Fadi Sabbagha. I'm the founder and CEO of Born Interactive. It's almost 21 years digital agency. We've been working on digital solutions and interactive experiences for customers, and our biggest chunk of portfolio is banks. We've been dealing with banks since 1997 on their digital presence, and we've been living and experiencing the whole evolution of the digital world, as well as the challenges of digital integration and digital communication, as well as the challenges we face in terms of integration and legislation and regulations.
Marwan?
Hi everyone, my name is Marwan Arakji. I worked in banking for nearly 25 years. Recently, about a year ago, joined a sort of a startup, fintech. We've developed our own in-house open digital banking platform. Basically what we do is, it's called Ubanquity. What we do is help banks leverage their existing systems, free up their data, and enable them to integrate with third parties and fintech startups, etc.
Okay, so let me set the theme a bit on what we're going to be discussing over the next half an hour or so. The formal title is, Connected Consumers, Mobile and Internet of Things. And, effectively, sort of there's a substantial amount of research on the back end, both conducted by ArabNet as well as other, players in the market, clearly designating that within the region, we have a huge percentage of people either, using smartphones on a daily basis or even, doing mobile banking on a daily basis. The percentages across all of those numbers are on the high double digits, almost moving to a ubiquitous status of the mobile devices. And I guess one of the key items that we need to discuss today is that, within this environment, what is the potential next step for banks? And is the next step, going mobile first or mobile only, if we discussed before? Or is it the next step to actually be even more than that and spread outside of their own ecosystem and their own silo and start, encompassing the mobile movement in its entire glory, across different applications and different domains. So to sort of kickstart this discussion over, the floor is yours, gentlemen, but give us a bit of an overview of what we just discussed and, a couple of potential best practices that you're seeing on that field, or things that potential interested parties should avoid.
Sure. I can say a few things about that. First of all, I think a gentleman, a couple of sessions before us, when talking about mobile banking, and it's really a thing of the past. It's not just a must-have; it's sort of a has-been. So people are looking out for more. Consumers are looking out for more. Best practices, in terms of best practices, many banks are today looking at shorter-term projects. Those, 2 and 3 year transformation projects are looking to be inefficient and lacking in profitability on the long run for banks. So ideally is to look at things that can be delivered to consumers within 6 to 12 months. Consumers today, basically you have 3 players. You have consumers, you have the fintechs, and obviously you have the banks. There's a big disconnect between the three. Consumers want one thing, fintechs another, and banks another. Banks, to a large extent, see themselves as an end, whereas in reality they are a means to an end, not an end in itself. Consumers are looking to have more out of their banking relationship, and they are going elsewhere to satisfy their needs today. Ideally is for all these three to partner up, to come to a realization that each one has something to bring to the table, and 1 + 1 + 1 equals 5, 6, 7, 10, not 3.
From my perspective, it's more an issue of really, to answer what Marwan has just said, it's a matter of understanding and seeing in the mobile banking solution not just a tool or utility for pure banking and pure financial services. The expectations of the consumers and the opportunities for the bank are way beyond just delivering the basic financial services. And so the first thing is to have projects that can really answer specific needs, to have a lean approach on creating those solutions, and be very flexible and agile, and to adapt to the requirements of the market that are, as I said, not just financial services, but there are marketing requirements, there are communication, transactional requirements that go beyond the only financial services, the basic financial services. So working in a lean approach and having platforms that could integrate and being less protective and on the data they can provide, and to facilitate those services.
Yeah. Let me sort of jump back to exactly your end point. So discussing data and following the fact that more or less we all agree that mobile is a necessity. Of course, there's a huge debate on exactly what we define as mobile. But coming back to the data and coming back to the additional elements that mobility itself brings into the game, could you give us some additional perspective as far as what would be sort of the key core data that for you emanate from a mobile activity, and also for those banks out there or even startups, when they start developing a mobile experience, what would be sort of the key KPIs that they should have in mind to evaluate whether they're successful, whether they're moving in the right direction, or whether they need to pivot or change their approach? And let's play the ping pong. So Fadi, you get started, and we switch back to Marwan.
Since, as we said, the user needs are beyond, are lifestyle related and real life related, and related to everything you do in real life, and everything you do in a way or another is linked to financing and payments, and so the data you can get, if you can penetrate more the life and the behavior of your consumers and customers to adopt your services and to adapt them, is huge. So the first KPI is how much I can integrate these behaviors. So the download, the use, how much I can use this channel that is more competitive and less costly to be able to solve real life problems and overpass the regular branch visit and the regular the other channels that are most costly. So the cost of penetration and the cost of acquisition and the cost of the transactions, and how much I can make sure those apps are the retention and the loyalty is the frequency of use between the different users, and the way they can use it as a real alternative to and convenient alternative to regular banking.
Okay. Marwan?
So many of the services out there that we consume daily have access to certain part of your data. So banks, obviously, they know where most of your money goes. the Uber example is a bit overused, but the gentleman who preceded us was with, speaking on behalf of Kareem. I listen to this and I start imagining services that could be available out there if the data was made open. So what if these services such as Kareem and Uber make available my spending per month on Uber? There is data out there from my bank, how much I'm spending on insurance for my own private car, how much I'm spending on fuel. If that data is accessible, say, to car dealers, they could come and possibly make me an offer, say, you're spending this much on Uber, this much on fuel, this much on insurance. You could actually buy a car from us, finance that car, and hand it over to someone who will use it, part of Uber, earn you money, get to use that car whenever you want. And so you have a car that you're financing, it's paying for itself, and it's earning you extra. So if such data is freed up by all these services, everybody can take advantage of it, and you get that 1 + 1 = 3 factor. So again, it's about freeing up data. And banks, by freeing up data, they get to also take advantage of that data at their counterpart that is made available to them, be it from other competing banks or other services that their clients are consuming.
Okay, fair enough. So to sort of summarize what we've said thus far, I mean, we all agree that mobility is here to stay, and it should be, sort of a strategic direction rather than an afterthought. I think the panel here, vividly words out that, the next wave of mobile applications or of mobility convenience services are not siloed in within the environment of a single bank, but it's potentially about working with a greater ecosystem. We have agreed, to open up the floor to questions, and we will honor that commitment. But before we do so, one final question on your end, which is, if we take a peek a bit further down the line, so a year from now or 2 or 3 years from now, and I think that's enough, more than that is probably, pure guess at this point in time. But what would be sort of 1 or 2 things that you would see being added in the mix of mobility, whether as new technological offerings are or completely new business models? So give us a couple of ideas, and then we will open up to the floor for questions.
I would say in the same line that since the internet will penetrate each and everything, we're expecting devices and tools with which we are interacting on a daily basis. And since financial support and the transactional side is needed to conduct most of the activities you need, it's obvious that you will witness more and more integration and between and needs and the pressure from the market and from the consumers to have their daily and mostly used device integrate with those all those platforms and with this growing IoT world and IoT devices. Obviously, this will require to be more open smartly and in a calculated way on your content and your data, and will at the same time give a lot of opportunities in better understanding the consumer based on his daily behaviors, based on how he will use a smart and properly done mobile app to get insights, to get on behaviors, on daily interaction that can help the bank tailor the products and the solutions. So the solution that would go beyond just the mobile, where the mobile would be the personal interface, but where we will see more ambient devices reacting in a personalized way. If you enter a bank, you might have a screen, and we already implementing solutions like that. reacting to you, identifying you. You will have services tailored to you on different locations in your daily life. And all this will bring data to enhance more and more your offering.
Well, I think what I would like to see happen versus what could happen is have consumers have more control over their own data and the ability to monetize their data. So I read this article about the 20th century being the organization of personal property and the organizational of the physical things that you own, such as title deeds for property, etc. 21st century is basically the organization of your own self, your habits, and your ability to monetize these. So the more you have control over your own data, your own habits, and your ability to open this up and monetize this. And I think that goes along with the entrepreneurial spirit of, the next generation of consumers, the millennials.
Excellent. And just as an additional point on that front, which is something, that we touched upon sort of in the periphery, the whole discussion about added mobility, additional data brings inevitably the discussion about security. And my personal comment would be that, potentially a bank or a financial institution might play a substantial role as a safeguard of information rather than as a safeguard, of money or gold or something like that. And with that notion, I think we can open up to questions from the floor. I think we're good on time, and we can take a couple of questions and have our esteemed panelists answer them.
If not, maybe we can ask the audience a question.
If you have a question, feel free.
How many of you feel that you're getting the most out of your banking relationships, or how many of you know for a fact you can get more, or if you had more access to information, you would be in a better negotiating or bargaining power with your bank to get more out of your bank? So. If you had that ease of overnight switching relationships from one bank to another, with just a click, how frequently do you think you would do that? If you had that ease of choice, the way you do with other services, the way regulators have forced a lot of service providers in many countries to enable you to switch. So, for example, most countries in Europe, you can switch utility providers from one utility to the other, and they cannot lock you in with a contract. You can switch your mobile number from one provider to another without having to lose that number. Current regulation will be forcing banks in Europe to switch and take your IBAN number with you, so that your bill payments and your financials are not disrupted. So how many feel that they are in sort of that trap? I guess everybody, nobody.
Okay.
I'd like to ask a question differently.
I think the market locally is still a bit backward in the sense they're still more conservative and they still look at the relationship with the banks more of a loyal or from the window of knowing someone in the bank and having this personal relationship inside, and looking at the other, the mobile banking as an additional alternative channel of interacting with the bank, as opposed to the main channel of being the link with that person in the bank. And in this part of culture, we're still, I think, hanging on the personal relationships, and they still provide more security to us, assurance to us.
Familiarity of...
Than the rule of law or the regular requirements that you see them more now surfacing across consumers in Europe.
I think the newer generation will be thinking differently. We
typical statistical information about the millennials is that 70% use the mobile app of the bank in the US, and 50% of them expect to be able to do payments using the mobile app. So, and are willing to change a bank if they don't have the services they want. And 27% have used mobile apps to do, or web, to do payments online. So yes, there is a big pressure from the new generation to, and the kind of relationship we have in Lebanon with the banker might be overpassed by the simplicity. I might have the best relationship, but it's much easier and much more convenient for me to use the mobile app to do what I need to do and to answer a specific need. Eventually, especially that the bank can be much more competitive with the services it offers. Some of the banks here in Lebanon offer, if the more you interact with the digital channels, the more you get discounts on your regular services. I will not name, but it's the case.
So that's having your money earn more money for you.
I have one question to the audience. I believe a lot of you are from the banking sector. Who's from marketing and more on the communication side, and who's more technical? Okay, a little question. How much do you believe that your mobile banking application and your technology team is allowing you to do and to achieve your aspirations and communication and ideas you would like to do on, and you believe your market and your audience and your consumers want? Do you believe your technology is allowing you to do whatever you want? Okay, so the silos are also not just between the bank itself and fintech. Sometimes it's within the same institution between the business and the technology and infrastructure. So and the regulation, but we will be surprised. Like the internet is evolving, the regulation will evolve fast, and the same way some institutions have difficulties in following the same pace of the technology evolution, they might face the same difficulties in adapting to a renewed and renovated regulation. So
many countries are accepting now KYC being done remotely via video or telephone. I had an interview with an embassy, and I showed my application for a citizenship, in fact. And I showed my passport over Skype during the interview, so that it was a method of identity verification for them. There are technologies today to make sure they identify the person behind the screen with the photo on the document to match both. So all these KYC hurdles that you face in banks, they're going to be sorted out by technology for sure, and regulators will be following along.
I want to go back to the point that you were comparing a bit the banks in Europe and the banks in Lebanon. We are more of a system, an American system, where people get loans here, whereas in Europe and the millennials and the generation Z that's coming up, they tend not to get too much loans. They're more of a debit type of people. So this is why it's easier for them to switch, even if they do programs to switch their loans and everything that comes in a huge package. But when you're in a relationship with a bank or any institution that lends you money, the contract has to be really firm because there is a lot of collateral damage. So we have a lot of technical issues at that point that it would be great if we could switch to whichever thing is more comfortable for us. But everything that comes...
Yeah, but you know, millennials, they're moving more towards you have Gen X, Gen Y, and millennials. Gen X now are considered to have, well, because I'm a Gen X, so they're considered to have been more successful than the generation that the baby boomers, the ones that came before. And millennials so far, I'm talking in terms of financially, millennials so far, they're struggling economically, and forget about the few billionaire startups. They're struggling financially, and most of them don't feel that they will own their own homes. So most of them are moving more towards consuming things versus owning things. And so banks will need to address this. Most of them will probably be consuming transportation through methods such as Uber versus owning their own car. Most of them will probably most of them still live with their parents. Unlike Gen X, they would leave home during college time. So banks need to also their products and services need to adapt to these changes.
So quite a lot of interesting topics. We're done as far as time is concerned, but feel free, to reach out and have a direct discussion over the lunch break. Thank you.
Thank you.